who is a active and passive full-time multifamily real estate investor. He actually has 1,720 doors, which is amazing as a general partner, the GP side. And on top of that, he has over 1,400 plus doors on the LP limited partner side. I'm glad to introduce him here. He is also the CEO of Elevate Commercial Investment Group and also the owner of a construction company, JNT Construction, that focuses on helping multifamily investors with their full renovations. And he's based out of Dallas. Welcome to the show, Jorge.
Thank you. Thanks for having me.
I'm glad you're here. So yeah, it's nice to meet you and, finally get to talk to you. I've seen you've done a lot of podcast shows. You've been around and you've been sharing your experiences and providing a lot of value to a lot of listeners. So I'm glad to have you on our show. Tell us more about yourself.
So I've been investing in real estate for about 15 years now. Started in the single family, then kind of worked my way up to small multifamily. Really started doing a lot of fix and flips and wholesales. That's when I decided to open the construction company to help scale. Had trouble finding good contractors, so decided to bring it in-house, and it worked. We were cranking them out. And then about 4 years ago, I was introduced to multifamily syndications, and kind of blew my mind because the scale was instant. One property, 100 plus units. So I really was drawn to multifamily in general. Started really looking into it, gaining the knowledge, and then decided to put all my focus towards multifamily. I stopped doing single family altogether, and that's where I'm at now.
Very nice. I think a lot of people go through that step-by-step, stone, and like going through single families, going to small multi-unit investing, and then slowly trying to jump into bigger multi-units. It's hard to go from just starting real estate as a new investor to go to a 100-unit building, right? And you went the construction route too. You brought construction in-house, which is a lot of work as well, a lot of fun. And of course, on TV, they make it look really good and really fun. But to understand the actual hard work behind that and people management, process management, fulfillment, timelines and permitting and everything, it becomes a huge nightmare in a sense, because there's so many parts of real estate. Which one is the best one to focus on? And it gets tough, and I see you smiling, and I know like you went through the headache.
I like the fact that you said, on TV they make it seem all those DIY shows. I mean,
it's easy, right? You just take, it's done. That's it.
Yep.
And even right now in the Bay Area, the permitting process, the COVID, the timelines, things take like 3 months to even get to permits. Even doing your applications, appointment can take over 3 to 4 months, unless you have really good connections or have really good business partners who can get you through the door faster. It's almost impossible now, and there's so many shutdowns, right? And especially in construction world too, a lot of workers aren't really working, and you don't want to really work with a lot of workers at the same time, and you're trying to do a project and you're trying to stay within a budget too. And even ordering right now, there's so many parts that are getting delayed, right?
Yeah. I mean, we've been able to work on our projects throughout this whole pandemic, but there has been some hurdles, like you said. Appliances were there was delays on appliances for a while. New construction now, that's a whole other, lumber pricing has gone up like crazy. So luckily we've been able to work through it and take precautions, and we've been able to keep the projects moving.
So like, what made you jump from going to single family to multi-units to going to construction and then going to syndication? Like, how did you decide to go through those hurdles? Was it just as you go along and figure it out?
Pretty much. I would like to say that, that I had that vision from the beginning.
Yeah.
But I didn't. I knew I wanted to start my own business. I knew that I liked real estate investing. And then things kind of just happened as it went. I knew I wanted to scale the single families, and if I brought in that construction in-house, that was really going to help. So I did that, and then I had gotten to a point where I just felt like I was grinding so much and so involved in the day-to-day, and it was from one transaction to the next transaction. That's why when I got introduced to multifamily, it blew my mind, and right away I knew that that's where I wanted to be, and that's what I've been focused on since.
I'm glad to hear that too, because yes, I think a lot of people are just generalizing. Like everyone starts single family just because it's easier, it might be cheaper price point, and because it's simpler, right? Going to multifamily has a little more complexity, but in actuality, it's not too much more complex, and at the same time, it becomes simpler because you can start scaling. I would not want to buy like 100 single family homes and deal with 100 of everything rather than buying one multi-unit. And you might start with a 2-unit, 4-unit and jump up to 16 and hundreds, right? But the fact of scalability makes it so much easier when you go into multi-units in dealing with single properties that have multiple units, multiple tenants and things like that. But over time, it becomes so much easier, right? As a cost perspective.
Absolutely. And I think the bigger you go first is actually better. I don't think you need to start with the 2 to 4 units or even the 30 to 40 units. I think the 80 plus units, maybe even 100 plus units is easier than those.
That's true, less liability too. And I think one thing some investors mentioned, for example, if you had 100 units, 1 unit vacated or 10 units vacated, that's only 1 to 10%. But if you had a 2-unit building, 1 unit vacated, that's 50%. And that becomes where the scalability helps so much easier in terms of your financials and your vacancy factor, right?
Yeah, I mean, one large issue, you've got one sewer line that's broken, or you've got to replace a roof on a small property. That's massive.
That's true. And I think it comes down to like education and mindset, like the education part of it. Of course, not all the syndicators out there want to talk about how great syndication is and how much money you make. And not everyone wants you to become a syndicator. And even then, if you do want to become a syndicator and they're coaching and teaching, it's not always easy, because the next hurdle is the mindset to actually get there. It's just say, hey, I can do this. I can go from skip the single family, skip the multi-units, skip the experience. I can just build into a syndication mindset experience, a big investor mindset. It's not easy to overcome upfront without a real mentor or coach to guide you through all the hurdles to get there, right?
I agree. A lot of this is mindset. Just the fact that you're dealing with really large numbers in multifamily, and just the fact that you're buying such a large property. A lot of it is mindset. A lot of it is just being past that and knowing that you can do it and having confidence.
Yeah, and you don't always have to be exactly in your area. It is nice, but for example, in the Bay Area alone, San Francisco, single families can cost 1 to 2 or 3 million, right, for single family. But for $1 million, you might be able to buy a 20 unit or even something bigger in a different state, and then think of it that way as a starting point. But you do need to build your core four and do a lot of research up front to find them and vet them in really well. But the difference is, hey, do you really want a 1 unit that makes maybe 4 or 5, 6,000 a month rent, or do you want a 20 unit or a 50 unit, right, that can generate more and have less risk in reality, right?
Yeah, no, I agree. I mean, that's a whole other mindset thing too. Being open to not going outside of your own backyard, and I think that goes for the passive and the active investors. You got to be careful. You got to know what you're doing, have a system in place, do your research. But I know once we started going I'm in Dallas, which is a great market, but it's also very hot and hard to find good deals in. So we do own here, and we will continue to find properties here. But we really started scaling once we were able to get past that and be able to invest in other areas.
What made you exactly jump into going to multi-units? You said it blew your mind when you saw the multi-units, but what part of it blew your mind?
Just the fact that I had been working so hard to scale and do lots of units, and the reason I set out this path was to build generational type wealth, and I really hadn't done that. I had made good money and whatnot, but I wasn't building a portfolio of properties. What I was mainly doing was fix and flips, some development properties, but selling them right away. So that's what kind of clicked. I was like, okay, well, this, here I can really start building a strong portfolio and have the cash flow and have the equity building up and really get to where I want to be.
I think you said a great keyword, and I think a lot of people don't think about that is, how do I create generational wealth, real generational wealth? It is not through fix and flips. Honestly, it's not. That's hard labor, hard work. It is, thinking bigger and thinking about scalability and how to take multi-unit investing, the bigger the better, as you go, but how to really build it up and why that matters. But that really creates real passive income, real equity, real capex, which depreciation, right? And that opportunity with real estate and taxation benefits from, of course, talk to your CPA, but at the same time, knowing those factors, there's so many layers of real estate investing that you can actually utilize to grow generational wealth. And the fact that it can become active or passive at a bigger scale than fix and flips, house hacks, other smaller opportunities, even stock portfolio, right? This creates real passive income and the ability to scale as you grow and to take that money and reinvest it over and over and 1031 exchange it if you can, creates huge generational wealth. That's why you see the biggest investors are all doing that. But in the mindset of education, there's not like a ton of promotion about how do you become an investor, a multi-unit family investor, a syndicator, and build up real generational wealth out. It's not really out there fully. You have to go find it, right? But that's the opportunity. You got to find it.
Yeah, I agree with you 100%. I mean, I always say that it's pretty frustrating that in our school systems we're not taught some of these things. I mean, it's so crucial. A lot of it is, the tax benefits alone has been a huge game changer for me. And it's just unbelievable that we're not taught that growing up,
Yeah, I think that's one of the supporting parts about education in school system, that you're not really learning true financial literacy. And I see Will Smith talk about that too. Like, how come we're not teaching people how to really utilize money in the society, right? And how to invest in, why it matters, and what the differences are. There's no courses and structures that guide you through everything easily to say, hey, at least I have a good understanding of basic economics and how to utilize in the different opportunities that are available, and then take it at your own risk, right? I wish it was there, and I hope I'm sure you're teaching your kids. I'm teaching my kids. We're talking about it as a baby. We're already reading a lot about real estate, right? And investing. And I know some syndicators are actually buying multifamily investment properties for the kids. So day one, the kids are already getting passive income, and they're saving for college. And when you graduate college, you can choose what you want to do with that multifamily investment.
Yeah, no, it's definitely in my plans to do something similar, and definitely teach them, as they grow up, what to do with money and the importance of it and whatnot.
Yeah, I think that matters a lot. And I think one thing, so I saw from Brandon Turner from Bigger Pockets that, he bought for his kids, right? So something for me and my family is I'm utilizing the kids, red egg money and all that money they put, I'm just putting it straight into investing in syndications and building that passive income and active income, right? And here, we already projection at 18, you're going to be able to pay for college easily, and then any college you want, and just keep building it up. So that's the fun part about it. So why did you get into construction?
Good question. No, like I mentioned before, it was really, I started it to just scale the investments, and then it kind of took off on its own and became something a little more than that. I think once I decided to start taking clients other than myself, right? And I had the mindset of an investor, that really made sense for the clients that were investors. And then that kind of just started taking off as well. So, I didn't really plan to grow the construction company to where it is right now, but I'm not upset about it.
I think one thing too right now, if you look at it, the construction people are the rock stars right now. They're the most needed people. Not even the real estate agents or just sales alone. Construction people are the ones who are heavily being utilized. And I think one thing is that there's so much work to be done out there. Everyone wants to be in real estate. Everyone wants to make money. The hard part for contractors though is dealing with everything, the permitting, the cost, all the people, the clientele, right, and then the workers, and then also COVID. But at the same time, there's so much opportunity. And of course, on TV, you see all these contractors making, huge remodels and like beautiful before and afters. It looks like crap. It looks like, and they make millions of dollars, right? It's that easy,
Yeah. No, I mean, it's definitely been a journey. Yeah, owning a construction company is not easy. It's been 11 years since I decided to open the construction company. And, just in the last year or two is when it's finally really, really clicked. I've got all the systems and processes in place. I've got a good team. Yeah, I mean, there was a lot of learning going on throughout the years.
Yeah, I think it's definitely, admirable too, because I know from a lot of contractors I work with, I know a lot of them are having a harder time right now because they're like, I can do the work, but the people keep leaving. Like the turnover rate is so high because people don't want to do being construction. It's so hard labor. They don't want to be in it. They want to do something else. They may be, other different businesses, right? And just getting tougher for that end. So they keep a small crew, but like to really grow a big crew or to do multiple projects and do it on a really good fast timeline is really difficult.
It is if you don't have the team, for sure.
Yeah, and keeping the team happy because of course a lot of other contractors are bidding them up too. Like, hey, come do my plumbing, come do my work, and I'll pay you more, and just keep paying more. So those guys are just running around trying to get, of course, for themselves, making more money for their family, understandably. So that's a challenge, right?
It's not that most crews, they just want to know that they've got consistent money coming in and that they're working for a company that they can trust, because there's so many, I hate saying this, but there's so many bad ones out there, bad contractors that don't pay their workers and kind of give them runaround. So that's never been us. We've always been 100% with our team, and we're always paying them no matter what. So I think that's helped keep everybody around.
That's a good thing too. I know when you have a really good, strong crew and you have that culture and they believe and they know they're getting paid and taken care of and it's become part of family, it's the most important. You see guys in the Bay Area, like one guy, he's a great guy. He's been doing it for 20 plus years, but he's doing 7-day flips every single property now. It's crazy, right? Yeah. You can do a flip in 7 days. He goes, and he's done like 40, 50 flips this year or more.
Yeah.
It's amazing.
Because with permits, there's no way.
Yeah, it must be all cosmetic fixtures and just like, fully blow it out really quick and make it just look really pretty. So that's fun though. And, he's making a really great name and doing a lot of great work. So I see that. And, right now you guys mentioned, you guys are investing in real estate in Dallas and also in other areas such as Oklahoma, right? Any other places?
Yeah, we just closed one in South Dakota and closing on another one there in South Dakota. And then we're looking at deals in Georgia, Tennessee. I mean, we're, the landlord-friendly states, and we're pretty much open to anywhere we can find a deal.
And how did you come about like, choosing these markets, even though you're open to deals, but how did you just, land on those markets?
First thing is it landlord friendly? And then the second thing is kind of digging into the certain city and areas within that city, looking at the metrics and the demographics. And then once we pretty much check each box, then it makes it to our list. Like, okay, this is a city that we feel comfortable investing in.
I think one of the hard parts about that for any investor is, okay, well, am I doing it myself? Do I have a team there? And how do I build a team in any different city? And if you're, as an active investor, you're cross-referencing multiple cities and states and finding the opportunities. But at the same time, do you have core 4 in every area, or do you find it right after you find the property? And how do you do that in a quick timeline to actually get the property too?
Yeah, so there's a lot there. Let me see. We love having somebody boots on the ground. That's 100% ideal if we've got, even if they're not experienced and they're just somebody that wants to gain the experience and can just be our eyes on a constant basis. And how we have that is we do a ton of networking. I pretty much have somebody in every major city that I think I can call and they'll be good to go if I had a project. So yeah, I mean, I think that's pretty crucial. And then you've got to go out there and you've got to get a feeling for the area too. But yeah, boots on the ground helps 100%.
Okay, and for example, you have boots on the ground, you find an investment property, you reach out to them, you have them take a look at it and say, hey, it actually looks like a good property, it actually seems like it makes sense. You do your due diligence, come fly over and meet me, run the numbers, talk to everyone, and then maybe at the same time build your core four there while you're planning it out and inspecting the property. And if all the numbers make sense and everything's actually true as they say it is, then you guys maybe do a LOI in the same interim, and then try to acquire the property, right?
Yeah, you broke it down pretty well.
Okay. Seems like it, but even then, just that aspect alone is a lot of work, to actually get it done. Let me see, sorry.
It is. I mean, look, we have maybe 5 sets of eyes that go through underwriting before it even makes it in front of me. So yeah, I mean, there's a lot to get it to that point for sure.
Nice. Yeah, I believe so too. I think having really good people to help analyze it before you even do, and that's great that you have five sets of eyes to help really take a look at it, because you have a different perspective. People live in different markets, they might see different things about it, they might know different things about the property or the area, and just having that alone gives you way more reassurance that, hey, what I'm looking at actually looks like it's makes sense and we should actually think about going for it. So once you guys go for a property, what do you guys do? So like, hey, you guys, how's that process work?
Ask that again.
So for example, let's say, okay, I've identified a property, right? And what's the next steps for you guys?
Like starting from the beginning.
Yeah.
One would be some high level underwriting, see if it passes on a high level, not digging into the financials and everything, just kind of, okay, what's the average rent now? What's the market rent? What's the price per door? What's the going in cap? And if that looks promising, then we take all the data, put it into our underwriting, see what the returns are looking like for the investors. We pull CoStar reports to verify things, to verify the rental comps, the going cap rate in that area, whatever we can pull from there. You can pull city data from there too. Then we start, if it still looks good, then we next step is we dig in even further. Then we'll maybe call some of the comps and verify. I'm hoping you can't hear my dog, but
that's fine. It's real light.
All right. So yeah, we'll verify more of the data that we pulled from CoStar or from whoever or from the broker, to the point where eventually we're going to go visit, set up a property tour, and confirm several different things. At that point, we'll secret shop some of the comps. We'll obviously check out the area and see the crime and make sure it's a good area. And if everything looks good there, then we'll submit our LOI and hopefully get it accepted. If it gets accepted, then usually we try to work in some time to start the due diligence before the PSA gets finalized. So we'll start digging in. We do very detailed and thorough due diligence. And depending what we find there, we may go back and negotiate the price or not, and then raise the equity in between that and close on the deal.
A lot of work, right? Sounds easy, but it's not. That's not easy at all. I think that you can look at property, you can do your comps, your analysis, talk to people. That's the not difficult part, but that's just part of your light due diligence, running numbers. The hard part starts getting when you start actually doing your LOI and negotiating and doing the real due diligence of every unit, every part of the property, all the information, the limited information they probably will have for you. Because usually buying from maybe a small mom and pop or not like an institutional investor, so you're doing more work, due diligence to make sure. And then raising equity, some people are great at it, but it can be a lot of work. Some people raise in 12 hours, some people raise in 2 years. It just really building that network, right? So I think a part of investing is really, as an investor, you're trying to do multiple fronts. One's marketing and building a real strong network so you can raise capital equity to purchase a property. The other part of it is using real estate knowledge, boots on the ground, and then building that side out of the business to go find and acquire property. But we're talking about too with one of my other syndicator friends, it's a lot of work to do both sides of it at the same time if you're one person. So you actually need a team to do this, and you need to find a strong team to do that. And because which markets are you going to look at? And if you have multiple properties in different markets, how do you choose which one? And how do you build the boots on the ground for each of them? And then how do you actually go see the properties and then acquire it? It can become quite expensive. And if you don't even win it at the end of it, and you just spend a lot of money for your due diligence, so that gets that becomes the biggest challenge for newer investors to start. I think one way is to start first, maybe become a limited partner and start learning in the market, start investing to other syndications, learning about these syndicators, investors, and watching your portfolio and how it grows first, or becoming an active investor and actively investing in smaller properties up front if you're doing it yourself. But in general, it is better probably to start investing in bigger scalability, because do you choose to use your money to buy one property, or do you put that money into a investment in syndication, right? And even as the limited partner actually can make more money than buying it yourself. Like for example, the Bay Area, if you're buying at a cap rate of 3.5 to maybe even 5, and you're getting upside in equity, and it's long term, but dealing with rent control and everything, the money could be there, but it's a lot of work to get there. But if you go outside, the opportunity could be 8% plus, right? And then what do you choose? Some people say, I feel comfortable, I'll take the 3.5 to 5%, and I'll wait for the equity to grow, and I'll grow it up myself. But that's a lot of equity down payment to put into that one property, right? It might be 1 to 4 or 5 to 16. Or you take the same money, you just doubled it by putting it into an investment. But now the opposite opportunity is you have to trust the operators. You have to trust that they're going to do what they say, and you have to vet them really carefully. And when you're vetting them, you got to understand their past history, the opportunities, their numbers, and their payout structures, and it's a different kind of due diligence. But the fact is, if you're saying, hey, you're giving me a preferred of 8% plus, and the opportunity for IRR could be like 15% plus, for example, then wouldn't you want to take that opportunity? At least start with a minimum investment for each syndicator and try a couple of different ones. And there's still tax benefits for those as well. But people say, nah, I'm good. But that's because the education part of it, right? Showing why it makes sense, talking to people, trust, learning, right?
Yeah.
That's where people get stuck on it. I'd rather do it myself rather than be an LP and limited partner and then pass it to someone else to handle it. But I think one challenge people don't realize is, what do you really want in life? Do you want to be active and do a lot of work, have another full-time job? Or do you want to become passive and make really good money and trust other people who are doing this full-time?
Yeah, or both. I do both.
Or both, right? Yeah, both is actually good too, because you can learn from both sides. And I think even when you do both, you actually realize, hey, here's my opportunities I'm doing actively. But as a passive investor, you're seeing multiple markets now. You're seeing how they run their syndications. You're seeing their numbers. You're seeing the property information. You can use that for your own active investing to help you make yours even better.
Yeah, I mean, I use it a lot for. So even now, I'm consistently investing passively in my deals and also in other deals. And I really like looking at the investor relations and how they deliver the reports. And, I take the stuff I like and I plug it into what we do.
You R&D it.
Yeah, I take the stuff that I don't like and I make sure we don't do that.
Exactly. And you start vetting syndicators too. You start seeing who's really performing really well at a high level and who's, outperforming, right? And who under promises and over delivers. And you start seeing who over promises and under delivers.
Yeah.
So that's kind of nice to see too. And some people you can tell are really good marketers, and that's about it. Some people are really good operators, but they're really not good marketers, So finding that balance. And I see a lot of people nowadays doing fund to funds and basically raising private equity to go into these bigger investments, right?
Yep.
I think that's another great opportunity that hasn't been discussed much. We're actually writing a course on that right now. So we're writing a course on the difference between an active investor versus a fund-to-fund private equity, and telling the differences of what you really want, what's easier. And I think one thing we kind of diagnosed was that if you're going to become an investor syndicator, why not start with a fund-to-fund first? Build your syndication network out, raise money for other bigger syndicators, watch how they grow, because they already have the boots on ground. They already been doing this for years. They already been raising money. And you start vetting the syndicators out, and in return, seeing both parties grow together and being able to do that. Then in the future day, when you're comfortable, you have your network now, then you can become an active investor syndicator and then use your clientele funds to go do active syndications.
Yeah, I mean, it's not a bad idea. I definitely think you've got to vet out that syndication team, and because you're going to be trusting them with all your investors. So you definitely need to take your time in doing that. But yeah, it makes sense. I mean, when I started doing this, that was my weakest link was raising equity. I hadn't done it before in the single family. We just had a couple private lenders, and we hadn't had to raise equity. But I went all in from the beginning. But from what you're saying, that's not a bad idea either.
Yeah, going all in is nice too. Like, I bought my first single family when I was 24 in San Francisco. I went all in, and it was not easy because you have to, live at home, and you have to you have to remodel, you have to, move in, you have to do all this stuff, and you have to get passive, like house hacking, get tenants to come in with you, right, and like live with them. But the fact that you're doing this, you're gonna raise equity, you're getting rental income coming in, it's paying your mortgage, you're living for free, and you just gotta keep scaling it up, right? But when you go to the multi-units, like I bought my first multi-unit when I was 29 in San Francisco. That's been amazing. The passive income, the cap rates can be over 12% plus in San Francisco when you buy it at the right time, when you know your numbers, when you know that what's going to happen in the future for forecasting, prediction, and data, then it becomes substantial, right? And that's just good opportunity. But it's not easy to be an investor. And I think we talk about is the mindset to just start doing it, right? And like learning from people and asking questions and understanding more as you can, right?
Yeah,
you did a good thing. You jumped in, you did construction, you did single family, you jumped into multi-units, and now you jumped into investing syndications, and you built a lot now. You guys have, over 1,720 doors.
Yeah, right around, should be over 2,000 DNS here.
Nice. And how did you guys get to that kind of scalability? Like, what was the trigger that got you from the first door to over 2,000 doors?
I think we have co-GPs on all our deals right now. Probably going to start taking some down next year, just us. But, I think the networking, meeting those co-GPs, making sure we're bringing value to those partnerships. And just focus. Like I said, I stopped doing the single family altogether. I'm not saying that you have to, if you're a single family investor, that you have to stop doing it. Luckily, I still had the construction company. So, multifamily is not something you're going to start making money day one. Like, you've got to start building things up. You've got to start gaining traction and really start doing deals. So I don't recommend having no income coming in and then starting multifamily. But yeah, I think focus for sure.
I think you're using some really good words and keywords and things to think about. One is focus, right? So I think for 2021, all of us need to focus on what do we really want for ourselves, for our family, for our business, for our life, and how do we really want it to achieve it. And the hard part is focusing on it because we're so distracted by just life in general. COVID, 2020 being crap. For a lot of people, it's a punch in the face for everyone, and just the way life has changed so quickly. But to realize that this might be the new norm, this might be how it's going to be. So you got to adapt quickly to the changes. You got to be more tech savvy, to be honest, right? You got to be focused. You got to have diligence in what you want to achieve, and then go get it and spend your time learning, educating, networking, and realizing what you want, and come back to focusing it up on it again, because everyone gets distracted by everything going on that you don't focus. You just the days fly by so quickly. It's already December 4th. Do you remember what you did in the whole year? Probably not as much as you could have done. And all of us promised for 2020 we're going to do a lot, but did we really all do that? No, we all got hit in the face, right? Yeah. And hopefully we stay safe. But yeah, you're right. Focusing on what you want.
You got to be aware of what you're taking in too. Kind of kill the noise and stay focused. You mentioned something I think that's very important too, is being able to adjust and flexible to the market and just things happening in general. If you look back, all the highly successful businesses had that. They adjusted with the times. Look, I went through 2008 and the crash, and we quickly adjusted and made some moves, and that's why we were able to continue to do real estate investing. So yeah, those companies that are slow to adjust and haven't taken their whole business online and are kind of resisting, they're not going to survive. I mean, we've seen it. You can in several businesses that have gone out of business in the past couple of years.
Yeah, I think some people hold on a little too long sometimes. Some people don't readjust quickly enough, or think that, things will just go back to normal. It hasn't. It's been a year. People say, oh yeah, remember first 2 weeks, it'll be gone in a month, it'll be fine, right? Yeah, it's been a year now. It's going to be a year, and we'll still see what's going to happen, but hopefully they can survive, because you're going to miss a lot of great businesses out there. Hopefully they can repivot and come back stronger. But one thing too, to go from single family to multi-unit, and some parts of it is how do you balance life, your job, investing in single family, and then switching over to multi-unit and not giving up the income? Because the hardest part is letting go of something to go to the next one, or trying to do both at the same time to adjust and slowly move over. But when you take that time, it takes a longer curve to get there.
Yeah. I mean, it was a tough decision when I decided I wasn't going to do single family anymore, because I'd kind of worked a long time to build that up, and I juggled it for a while, and I just knew I wasn't going to succeed in any one of those unless I decided to focus on one. And one thing I didn't mention is, one of the reasons I made that transition too was for time with my family. My family's growing. We've got I have three beautiful daughters. They're under the age of 7, all 3 of them. I want to be there for them. I don't want to miss any important things in their life. And to me, if I do this right and I build a team, this is going to give me a lot more time than when I was running around doing 50 fix and flips a year and all that stuff.
50 fix and flips a year, that's a lot of work. That's a huge overtaking a lot of manpower to do that, right? And I'm glad that you realized for yourself, for your family, the time is the most valuable thing out there, and to spend the time with your family and raising your kids. You have 3 beautiful daughters. That time is going to go so quickly. You want to watch them grow up. You want to go to their first dance, their proms, their life. You want to be a part of it. You want to be a great dad and be a part of their whole life, and make sure you raise them so well that every guy has to, step up to your level of care, right? And that's you're going to make it really hard for them to make sure, and that's the best way to do it, I would say, and I completely agree. I think my focus for this year too is really gaining back time. How do you increase your dollar per hour productivity, and how do you learn to delegate further, faster, and let go of things you really shouldn't be doing? You know someone can do it better, cheaper, faster, so you can focus on what you want to do, which is, for example, for you guys, building up the syndication, building up the investing, building the portfolio up and getting the passive income, right?
Yep.
But that's a challenge. Most people are hard to go to each level and not willing to change or to adapt and to learn from others, to educate, to keep going up higher, right? That's the hardest part. And networking is the key to it, because networking helps put you in the right mindset with great people who are already doing it, who might be happy to help you and show you or guide you,
Yeah, no, I mean, I think the hardest part of building a business is that, building out the systems and processes and putting together the team that allows you to really manage the business and not so much the day-to-day. To me, that is the biggest, where most businesses fail, is right there.
I think the part about it is the change. Like most people's habits are not wanting to change. You know how you look at that bell curve where you see innovators and you see laggers, and most people take at this midpoint where they're just kind of like waiting, and they don't know what to do yet, but they're waiting until the right time, but they don't know when the right time is going to happen. And all these other guys are just blowing it up, and then the laggers are just behind. They're so far behind, they're not going to catch up. And hopefully something just clicks in their head one day and they do, and then they come up, So that's the challenge too, like the 80-20 rule. 80% are not going to do what you want to do. You're not going to learn. You're going to show them everything, and they're still not going to do it. You hand them the keys, and they still won't do it.
Yeah, you got to take action. I mean, there's only so much. Learning is good, and knowledge is definitely power, but not if you don't take action.
Yeah, it's all about execution, right? They say there's some words like it's better to, instead of looking good, you gotta just start executing, right? And you'll make it look good on the way you go through it, but you just start executing and you start improving it as you go along. You don't wait for perfection first and then start executing, because you'll never be there.
Right, you get stuck.
That's a challenge. So when you get into multi-units, you guys started renovating. What kind of common pitfalls do you guys see happening?
Some of the things I see with other investors in multifamily is I think they wait a little too long to finalize their scope of work on the CapEx. Usually they wait till they close, and I feel like a lot of time is lost. We spend a lot of time up front before we even close on the property to kind of finalize everything. Okay, this is what we found during due diligence. This is the deferred maintenance and the items we've got to take care of. What are we going to take care of? What aren't we going to take care of? And then what exactly are we going to upgrade? How many units? Which units? Should even start getting into the design. Okay, well, what colors? What this? What that? And that way, from day one, you're starting your CapEx and you're implementing your business plan from day one versus kind of waiting and spending months figuring that out. Doesn't make any sense to do that.
Why do people delay and wait, you think?
I think it's because they're so busy trying to make sure that the deal closes, right? Raising the equity and the transactional stuff as far as the debt and this and that. And that's just one of those things that kind of gets pushed aside. Oh, well, we'll figure it out when we close. But if you're confident you're going to close, you might as well start working on that.
Yeah, I would agree with you on that. I think one part of it first is like, if you're a newer syndicator investor, then you're gonna start smaller and just do what you can get done. Of course, as a independent person. But if you slowly build out a team and you start delegating things out, you create that trust where one person is taking care of the financials, everything else. The next person is doing the design, they're thinking about the improvements, add values. Then you can start doing that. Like, one example of, I sold a multi-unit property in San Francisco. When the buyer side agent and the team got into contract, they had a whole army come the next day. And the army was this: interior designer, a stager, the contractor, the architect, the electrician, everything. So they all came in one day, and they took a look for a couple hours and reviewed the whole building. They said, okay, we know exactly what we're going to do. Once we close this, boom, everything changes. They already planned it from day one of being in contract, not even removing contingencies. They know they're going to close. They have the money. So they're just utilizing that 21-day window, 45-day window, and they're utilizing that for the seller to pay the interest, but they're using that timeline to go plan everything out. So on day one, the LLC is already open, everything's ready. They're submitting permits and plans and going to construction.
Yep. That's exactly what I'm talking about. Yeah.
That's the amazing part too. And especially you guys, you have a construction team with it. You guys have the investors with it. You guys can do all that. And it just takes diligence and time and planning and focusing on the right things. So, upfront for your investor group, here's our model, our execution. We're going to start from day one. Here's the numbers and here's how we're going to hit it. And you already know your cost.
On top of that, you don't underfund the deal either, which is the last thing you want to do. And I've seen that happen before too, where they didn't take the time to really look into how much it was going to cost for some of the repairs and upgrades, and just using rule of thumbs or thinking they know how much it's going to cost. And next thing they know, they're $500,000 short. Then what?
That's true. That would be, you would hate to do a call right afterwards for that additional funds from your group who you just told, hey, here's our numbers. Wait a minute, I need another $500K from you guys. I'm sorry. That doesn't look as good, and some people just overestimate, but then you're carrying interest on the overestimation. If you're going to start pulling it, you can always pull it later, but at the same time, just I thought, hey, you asked me for $2 million. Now you only need $1 million. What happened there? I could have used that money for somewhere else. That is a tough part about it, but it's nice to see that you guys can forecast the numbers up front, makes it a little bit better and makes it a little more secure. Like, okay, based on your experience level and being a contractor yourself, we can kind of hold you more accountable that you might, if you reviewed all the units, you can kind of get a better estimate of what it would really take to make happen. If you do your work, of course, due diligence throughout every unit, and just taking a rule of thumb is nice to have, but it's not always perfect by far. Okay. So what trends are you seeing right now in the multifamily investing space?
Trends.
Like, how's it in your area? How's it in other markets you're in? Like, what do you see happening in the multifamily space with and pre-COVID and with COVID?
I'm definitely seeing the heavy lifts are not as attractive as they were before. A lot of individuals looking for more cash flowing. Some investors that were really focusing on Class C properties are now looking at more Class B, maybe even Class A properties. And I think that obviously has a lot to do with COVID. Bridge financing has become more difficult. Terms aren't as attractive as they were. Workforce housing, there's still a lot of concerns there as far as collections and, as these cases keep growing, if there's going to be more shutdowns, and where mainly those workers are coming from the workforce housing. So I think that's probably the biggest trend I've seen. Renovation wise, maybe even doing a little bit less renovations. I've seen that. Where before, investors were really trying to hit the top of the market on the rents and doing major upgrades. I've seen that kind of turn down a little bit.
Yeah, and I think from what I've seen out there right now, I've seen a lot of investors who were focusing on Class A's. They were actually, now they're becoming way more conservative. They're readjusting the vacancy factor. They're readjusting the rents to lower projections, and they hope to, they're not over-promising. They're just trying to make it what it is with COVID and take that factors into play. But of course, hopefully they can over-deliver in the future. Some of them have really good occupancy rates of 96% plus. Some are 85%. And some are way lower. It just depends on the market. Workforce housing, it can be a concern, especially with COVID becoming more in a purple color. And over time of all these businesses closing down and keep shutting down, then it becomes more scarier as a multi-unit investor in that space. And that's where we come back and talk about when you start going to bigger units of scalability, having 100 units, 400 units, the concern can become way less. than a 20 unit, right? If you had 50% people vacate a 20 unit, then you're going to be in a lot of pain versus a 400 unit and having 20, 50 people vacate. It's not too bad. You can kind of do that. And I see some investors right now, they were renegotiating into the deals when they say, hey, COVID hit, I'm going to change my vacancy factor number to 25% vacancy, even though you're at 897 right now or 87. And we're going to readjust the pricing for that. And some sellers will say, okay, I get it, right? And they'll still sell it because they need to sell it. So then you have a good opportunity to still be in a good point today, right?
Yeah, I haven't seen as many opportunities like that, like I thought there might be. Not that they're not coming. But, I think they may still be coming. There just hasn't been a ton of it.
And yes, it's tougher now. So you're doing way more due diligence. You're looking at the leases, the numbers, who's actually paying. But the good thing now in December, you have 9 months of historic data of what's happened for that building. But that doesn't guarantee next year anyways. No one knows what's going to happen next year. Hopefully a good vaccine works, comes out and everyone gets it. How long will it take to get everyone? And some people might not take it, right?
Right.
What will happen to the people who took it? Will it really, prevent it 100%? Hopefully.
Yeah,
so those are factors, right?
You get that immunity, but
I hope it's real immunity, So like, are they going to test it? Here's one guy who's immune and then going to stand next to these 10 guys who have COVID, and see what happens? Yeah, I hope so though. I hope everyone gets taken care of. So, when it comes to raising equity for your investment group, how do you guys go about like finding your investors?
We do quite a bit of building our platform on social media. We were doing a ton of networking before COVID. Still trying to do the online networking and doing a lot of podcast interviews and presenting whenever we can. I'm trying to think of what else. We've tried to do some different things as well, like accredited investor list and reach out to them. Constantly doing more things online. We've done some retargeting ads and Facebook ads. We haven't done a ton yet, but I think that's something we may increase in the future.
Yeah, I think that's a great idea. And for any business out there, we have to focus on marketing, and sales is a part of it, but marketing is a huge part of it. And like telling your story, showcasing your company, your values, and why. There's so many investors out there, so many syndicators out there. Like, why work with your company? Why put my money with your company? What's the difference between you guys and some other guy over there, right? How does that work? And understanding, like, what do you guys look for? What's your mission? What's your vision? What's the values? And telling that story and make it in a compelling way where people actually want to interact with you. And I think a great thing is, you doing these podcasts, just like mine and others. What happens is we're really getting to know you on a one-on-one basis, and that when we talk to you, people have a really good understanding. And the reason I do podcasts a lot is because people can see behind the scenes. Hey, here's how Matt thinks. Here's how Jorge thinks. Here's the questions they ask. Here's the opportunities they look at. Here's the things they don't look at. Or you start seeing why they're choosing certain markets, why they're choosing certain types of investment vehicles, and how they're forecasting that would make money. And when you start looking at other syndicators or investors who are not doing that, then you can say, why would I work with this guy or a person? I don't know them as much as I know Jorge, right? That's an opportunity that really comes into play. And the more you do it on social media and have a presence online through YouTube, through everything, and you're educating and providing value back for free, the more people will actually want to work with you, and the more they trust you and you earn their business, right? Because you've given them so much value and things to look out for. Like, for example, hey, as a past investor, you want to invest in syndications. Here's the 5 things you should look for in an operator. Bam, 5 things. And they go, wow, thanks, Jorge, for telling me that. I didn't think about these 5 things I should look out for. And here's how we help you with all those 5 things. Here's what we look at it, and here's what we do for that. but you're doing it on so many different levels and so many different areas. Like here's, construction, here's cost, here's capex, here's lending, here's locations and things to look out for, right? As a contractor, here's all the things you want to watch out for from a contracting perspective. If you want to renovate, here's 5 things you should ask your contractor. Why are they always over time? Why do they not have a penalty for passing for 5 months? Things like that, right? How do you get them to pay a penalty?
Notes here, hold on. Yeah, no, I agree, man. I also focus a lot on documenting just what I'm doing in general. If I'm out doing a due diligence on a property, I'm gonna do some Facebook Live videos. I'm gonna document it one way or another, and I'm also not gonna try to do it super professional either. I want to show the real me and what we do, and I think that helps. I get better feedback from the worst videos I've done, like quality wise and whatnot, than I do from if I have somebody do a professional video. So yeah.
You're right. Those are the best. And like Gary Vaynerchuk says, just document everything you're doing and make it public, and people can see behind the scenes. They get to know you, and they see the real truth behind the real estate, right? And that's the way better way than making everything professional. And we tell people that, but they get so caught up in I need to make it look good. I'm like, no, you don't. You need to tell a story. What's the story? I'm doing I'm taking a look at a property, do my due diligence. Here's things we're looking at. Wow, I can't believe they did this to the property. We need to fix that. Here's how much we think it's going to cost in the time, but it's worth it because X, right? So I'm glad you're doing that. And I think that really matters, telling the story, showing behind the scenes, putting it all over different platforms of social media, getting people to understand it. And you actually create a natural following from that. Like even from this podcast, I'm like, I would not have known all these top realtors are actually watching my podcast, over and over. And like, they've seen so many episodes. I'm like, really? You guys are so busy. You guys are doing this. No, but these guys are great people who want to learn, and they still want to improve, and they still want to meet other people, and they still want to network, and they want to be a part of it, right? So it's an amazing part of it where you can explore different areas, markets globally, and talk to different people. And I think this is a great thing. Like, for example, having you on this podcast, we're learning about you, we're learning about your business, the syndication, the investing, construction. We're learning about Dallas, Oklahoma, different markets. But without these podcasts, who can really hear you, right?
Yeah.
Yeah. And ours is on Facebook and YouTube Live too. So you can, it's going to be all over the place, and you just keep building and scaling it. So that's the part of the scalability, scaling your business and over opportunity over time. And people, the more network effect you create by having different opportunities and resharing, the bigger it gets in total, right?
Yeah. I mean, when you can tap into others' networks, and they tap into your network, you tap into theirs, then yeah, the growth really starts happening.
Perfect. And we're about to wrap it up, and I want to ask you too, where do you guys see yourself in the next 5 years? What's the goals? What's the plans?
Next 5 years. So 5-year plan is, I want to keep growing multifamily portfolio. I want to take it to above 20,000 units by that time. Probably also bring in property management for sure in-house, and then possibly some other functions that kind of tie into the multifamily. Not sure what, but I'm sure I'll think of something else.
So you're basically creating an ecosystem then. So if you're going to have construction in-house, you're going to have the investing in-house, you're going to have marketing, you're going to have property management, then you're building an in-house solution that has a higher standard of care, right?
Yep. You got it. Be able to, really implement our vision without having to hire third parties, and that's it. Have a great team around me to where I can still spend the time with the family, like I mentioned, and hopefully just popping into a few meetings, checking on a few properties, and that's it.
I would say that's kind of like Apple's model of how they, when they start building, they slowly bring everything in-house, and they keep upping the quality level so high that it makes it so much harder for competition. But at the same time, you're just growing your own services. You're not really caring about competition. You're just improving yourself day to day and making the standards so high that people just want to work with you no matter what.
Yeah, I agree.
I like that. So how can people reach out to you, and what are you looking for investors?
They can reach out. We constantly updating our website. We've got a ton of free content on there, and that's elevatecig.com. As far as what we're looking for, we're always looking for passive investors, those that are looking to place their funds somewhere else, alternative investment, and then we also do a lot of co-GPing. We have investors that are looking to get started, or just, we have some seasoned investors too that just want to bring in another GP to help with CapEx or help with whatever it is. So we're always open to that. Yeah.
Perfect. Yeah. So be sure to reach out to Jorge at elevatecig.com to learn more, and keep watching the opportunities you're bringing along and the education you're bringing. I appreciate that. I love education. I love seeing more value to the community, and we can just keep resharing and building and networking, right?
Yep.
Cool. So hey guys, thanks so much for being on the Truth About Real Estate podcast. We'll see you guys in the next one. Have a great day.